Hola, everyone, and happy Halving Day. This is David coming at you live from my house as our studio is under construction, putting the final touches on our production room. We got our custom desk coming in this week, so a lot of exciting stuff happening. So I am streaming from my house. It's going to be me solo today. And to all of you watching, happy Bitcoin Halving Day. The day is finally here. We got a lot to talk about today. We're going to talk about, of course, the halving, a new protocol, runes. You've probably heard about it, but we're going to dig into what runes are and how you can potentially make some money with them. That goes live with the halving at the block height number 840,000. Also going to talk about a big partnership for Aptos with Microsoft. What does that mean? Also going to take a look at some prices, which congressperson bought Bitcoin. Also, guys, do me a favor, throw a 1 in the chat if you can hear and see me well. That way I know I'm kind of watching the chat here. So we're going to talk about that. Also, the Bitcoin ETF flows continue to slow down. They went like 5 or 6 consecutive days of outflows. What does that mean? And when should we expect this thing to pick back up? We're going to talk about that. Talking about a little bit about Cardano and them entering the Voltaire era, and what that means for the network and what that means for you if you're holding the ADA token. And then DeFi is starting to explode, seeing a 80% plus price or a TVL increase in Q1 of this year. What are some projects that we have our eyes on? We're going to talk about that and much, much more. So to all of you, welcome. Excited to have you. Before I forget, do want to give a big thank you to our channel sponsor, Cam's Blue Wire Technology. You guys have been watching us for a while. You know, Cam's is our longest tenured sponsor. We love and appreciate them. The show, the way you see it, the 4K, the quality would not be possible without them. To maximize your networking, IT, and your cybersecurity, there is one company you should go with, and that is Cam's Blue Wire Tech. Visit bluewiretech.com, or there is a link in the description of this video. All right, so with that being said, let's jump in to the halving. So happy halving day, my friends. We are currently 41 blocks away from all of your Bitcoin in your portfolio being cut in half. Just kidding, of course. You never know. It might be some newbies watching that are like, oh my God, no, let me go sell it. All this is the miners, instead of getting 6.25 Bitcoin per block mined, they're going to get 3.125. And so from a business standpoint, that's not good, right? Your revenue is getting cut in half. But there is a new protocol, which I aforementioned in the beginning, the Runes protocol. We're going to go over an article here in a little bit that, hey, maybe this is the solution. We thought ordinals and BRC was a solution, but it's clogging down the network. It's making Bitcoin almost unusable for microtransactions or even medium-sized transactions. But the Runes is looking to do something very unique, leveraging UTXO, and this could be what secures the Bitcoin network as the mining rewards continue to drop with every single halving. You can see on the screen here. Big shout out to Watcher Guru. This is a great halving countdown. 7 hours and 19 minutes. So around 9:25 p.m. Eastern Standard Time, we will see Bitcoin's halving reward get cut in half. So exciting stuff. Except, of course, if you're a miner. So you might have people that ask you, hey, what's the halving, man? What does that even mean? I want you to show them this video. Now, this video doesn't have sound. Doesn't really need sound. When someone asks what the halving is, tell them it is the opposite of this, okay? Tell them it is the opposite of this. So, good old money printer. I wonder how many of these are. You know, the Treasury has one. Maybe the Fed has one. Maybe the president has one in the Oval Office. Who knows? But this is the process of creating paper. And yes, that is toilet paper. And so, but all jokes aside, guys, as Bitcoin continues to grow in size and market cap value, becomes more liquid, it becomes more accepted worldwide, the narrative around it changes. People are going to continue to see the fiat system failing, as what you're seeing on your screen here is what happens. Not sure the frequency, but let's just assume the thing happens every single day, printing of new money, just completely eroding your savings. And a lot of people don't talk about how this is really I hate to say it, the best way, at least from a government standpoint, of bringing their debt down as you inflate the debt away, right? It hurts the consumer, it hurts people like us, hurts people like you watching, but it's good for the government because it devalues the currency, right? It devalues the currency, it devalues debt, and so it's bad for people holding U.S. treasuries. It's good for the U.S. government who is going to soon come to a point where they probably won't be able to pay it back. Then I want to share this from Bitwise. Historically, the halving has been good for Bitcoin's price long term. The change in Bitcoin's price in the year following the halving. So in 2012, 1 year after the halving, Bitcoin saw price appreciation of 8,839%. In 2016, fairly a little more on the milder side, only 285% 1 year after the halving. And in 2020 was 548%. 1 year after the halving. What will it be this year? Who knows? The change in Bitcoin's price in the month following the halving. In 2012, Bitcoin's price went up 9% 1 month after the halving. 2016, it went down 10% 1 month after the halving. And in 2020, went up 6% 1 month after the halving. The data is limited, but the picture reveals an intriguing pattern. The market prices in the short-term impact of the halving, but underestimates the long-term impact, right? It all comes down to just basic economics, guys, supply and demand. Even if demand stays the same, supply is getting cut in half, right? So we don't need to go over the steps of that, but yeah, there we go. All right, let me check in on the chat here for a second. See what's going on. So we got 114 people watching, 35 likes. Make sure you guys like the video. Shout out to Redman, Crypto Billy, Jason, Caffeinated Crypto, Zoltan. All you guys, we appreciate. Where's Jimmy, man? Jimmy, shame on you. Where you been? You cheating on us, bro? And all of you, welcome. Guys, do me a favor. Stay engaged in the chat. Throw some questions out there. Have some conversations. I'll randomly go to the chat. Maybe pick a few things to highlight. Maybe open up a discussion with the chat. That would be kind of fun. Okay, so let's take a look at what have the miners been doing, right? What have the miners been doing? This is from Digital Asset News, our friend Rob over at DAN. Looks like the miners have been selling into the eventual halving. I don't blame them. In a few hours, they're going to do the exact same work for the exact same overhead and receive half of the revenue. Of course, just from the block subsidy, you still have transaction fees. Maybe ordinals and runes will help offset this. Again, we'll talk about that here in a little bit. But interesting, miners are selling, but you guys got to remember, these miners are operating a business, and operating a business takes money. All right, some funny stuff I want to share with you guys. So this is tweeted from Dylan Leclerc. Babe, please pay attention to me. It's been weeks. And here we have you watching. You got your eyes glued to how many blocks are left until the halving. And then we have this. To your left is Mr. Steal Your Data. And to the right is Mr. Steal Your Girl. Everyone's going crazy over Mark Zuckerberg's new look. Then I want to share this video with you. Again, no audio here, but pretty self-explanatory. Pretty cool effect there. Okay. What do we got going on here? What are we going to do? That's funny. All right. Let's take a look at some Bitcoin flows. This is from Farside. So yesterday, let's go back to the beginning of the month, right? Let's take a look at what Grayscale was doing. They're going to be on the far left in the red, right here. So 302 million in outflows to open the month, followed by 3 consecutive sub 100 million day outflows, and then it kicked back up again. April 5th saw almost 200 million. April 8th saw 300 million. And then April 9th saw 154. Then the very next day on the 10th, we saw pretty low outflows, only 17.5 million. This is where Rob and I were kind of like, hey, is this the beginning of the end of the massive sell-offs of Grayscale? We were proven wrong. So the following day, we had 124 million, 166, 110. So it's kind of been all over the place, but it's still, for the most part, reaching that 100 million mark, with yesterday coming in at $90 million of outflows from GBTC. They have bled. Grayscale has bled $16.68 billion of Bitcoin. $16.68 billion of Bitcoin. That is more than half of what the value of the Bitcoin holding was 6 months ago have left Grayscale in 3 months. 3 months. And we still have net flows of 12.2 million positive because, of course, of BlackRock and Fidelity. BlackRock, I didn't even realize BlackRock is almost 2x what Fidelity is as far as net inflows. I mean, you take a look, BlackRock has had over 64, I believe, consecutive days of inflows. That number could potentially be wrong, but yesterday we saw 18.8 million. After throwing up a goose egg yesterday or 2 days ago, Fidelity brought in 37.4 million, leading the way. And the rest, actually, you had Bitwise, ARK, and what's this last one here? HODL. So Van Eck brought in 7.2 million. So pretty minuscule on the rest of them. But BlackRock and Fidelity continue to lead the way again, with BlackRock 15.39 billion in assets under management, and Fidelity coming in at just over $8 billion. So what does this tell you, right? We talked about, let me take a little sip of water here. We talked about, well, just anything in life, nothing goes up forever, right? You saw a massive pent-up demand from people not having access to a product like the ETF. The ETF goes live, bam, we start seeing $500 million inflow days. I think we had close to $1 billion inflow day, 300 million, 400 million, 200 million, 100 million, and it's starting to taper off, and everyone's like, oh my God, it's over. Guys, this is just the ebbs and flows of the markets, right? Big pent-up demand, people enter into the product, things start to taper off. We did see some outflows from newly launched products. 2 days in a row, starting on Tuesday, we saw ARK have 2 consecutive days of outflows. So you guys got to remember, this is still Wall Street, right? People are still selling in and out, trading in and out of their positions, especially those people who perceive Bitcoin as a risk-on asset. Me personally, I know it trades like a risk-on asset, but I don't view it as a risk-on asset because my time horizon is a lot longer term. But some people don't look at it as a risk-off asset. They look at it the same way they look at tech stocks. They look at it the same way they look at maybe some of the higher volatile stocks and companies that are trading on the stock market. So they're going to trade it the same way, right? An inkling of bad news, the whole thing that happened over with Israel and Iran, the whole thing that's happening in Ukraine, and whatever the case may be, and all the printing and what the Bank of Japan is doing with the currency there, they get fidgety and they sell their most risky volatile assets. And for them, these people who are used to, hey, let's just get 8% a year over 40 years. Great, perfect, that's awesome. Now they're like, oh shit, I made 30% last month. Oh my God, I lost 18% this month. They view it as a very volatile asset. So that's probably going to be one of the first on the chopping block as far as, hey, let me downsize my risk and be, I don't know, in gold, commodities, anything else. They really haven't come around to, well, Bitcoin is really moving towards being a risk-off asset, being a hedge against inflation, being a hedge against government and currency debasement. We did share a video with you guys this week in Canada. Someone tried to withdraw 3,000 Canadian dollars, okay? 3,000 Canadian dollars from their own bank account. And the bank teller was like, well, what do you need it for? Well, I need it to pay for a service. Well, where's the invoice? Like, what? It's my money. I'm not asking for half of the bank's money in the vault. I'm asking for 3,000 Canadian dollars, which is like 2,200 US dollars. I don't know if my conversion rate there is correct, but you get the point. So that is one problem that Bitcoin and cryptocurrencies and decentralization can solve, is the money is sovereign. It's not tied to anyone, right? One of the big reasons that people started dumping US dollars, or nation states started dumping US dollars, because they saw what happened with Russia. Russia invaded Ukraine. The US said, hold up, wait a minute. We're going to freeze all of your US dollars in your bank. Why? Because we're the issuer of the US dollar. So other countries are looking around like, so if we do anything to piss off whichever president is in office, we could also get our money frozen. Yeah, that is a risk I'm not willing to take. They start offloading US dollars. They start buying gold or maybe another currency out there. So same idea here, but on the consumer level, right? You have essentially a bank account where you control your private key. No one can tell you how much money you can give or get. I bet you if you have $100,000 in your bank right now, go to your bank teller today and say, I want to withdraw $50,000. And then come back and tell me what they tell you to do. They're going to say, well, what do you need it for? You need to fill out this form. We need to verify your identity. We need to verify your social security. They're going to verify your ID. Then they're going to ask you for 3 to 5 days to get your money. And then they're probably going to charge you an exorbitant fee. With Bitcoin, if I have $100,000 on my Ledger or on my Trezor or whatever hardware wallet, even on a hot wallet, I can just be like, okay, I need 50K. Great. Let me just take the money out, 50K, sell it, send it back into my account. Or if you have a card that allows you to spend your crypto and on the back end, they have something like BitPay, convert it to whatever currency you're trying to essentially settle on the back end, you can do that too without the need for anyone to say, well, what do you need it for? We need to check your credit. It's all complete BS. It's a control mechanism. And that is something that people haven't come around to yet on Bitcoin. They just focus specifically on the price. Oh my God, it's down 20%, 30%, it's up 100%. That's great. We're all here to make money. But at the end of the day, there's people in this world that are getting screwed over by governments and central banks, and Bitcoin for them is a lifeline. Let's never forget about that, guys. Let's never forget about that. All right. I did mention a congressperson bought some Bitcoin. So which congressperson is it? He disclosed his Bitcoin purchase a day before the halving. Now, he didn't buy a day before the halving, but he told us about it. Amid growing scrutiny over financial trades by members of Congress, Representative Barry Moore has disclosed a Bitcoin purchase made a month before the crypto's halving event. He disclosed his purchase that he made on March 30th. He disclosed it yesterday. And the purchase was only between $1,000 and $15,000, bro. Those are rookie numbers, man. You need to pump those numbers up, kid. What movie is that from? A bonus point to anyone who gets that movie. And then this is what it looks like. So Barry Moore, he is a Republican who sits in the House of Representatives. I believe this is Alabama. And so shout out to Alabama for being very Bitcoin friendly, I guess, because you're a congressperson. All right. Before I share the piece of news, let me take a peek at the chat here, see what you guys are up to, see if you guys are you guys behaving? You guys are behaving. All right. Where is the TA expert? I mean, Rob. He's busy. So we're dividing and conquering today. Rob's in the studio rewiring everything, and I'm giving you guys the content. So happy Halving Day. Harp, happy Halving Day, whatever that means. Miguel said, only if tensions in the Middle East scale. For me, worst case scenario, we test 58, bad case scenario. I think worst case scenario, and this is just my opinion, Miguel, I could be completely wrong, you could be completely right, but worst case scenario for me would be in the low 40s, maybe even the high 30s, if, let's just say, like, crazy war breaks out in the Middle East. I don't know, the inflation starts going up to, I don't know, 8 to 15%. The Fed tries to hike again. But I think if we get to that point where there's rampant wars and whatever else going on in the Middle East and across the globe, inflation is extremely high. I think, I mean, call me crazy, call me stupid, but I think they're going to maybe cut rates and issue more money. It's the only way to keep that Ponzi going is to refresh the bank, right? Refresh your account, all the money that's going out. So that's my worst case scenario. But again, what I always tell people, and if you're new watching, what I'd recommend you keep in mind is before you enter into a trade or before you enter into a position on any asset, whether it's Bitcoin, crypto, or whether it's a stock of a company, you do some analysis. Like, hey, I'm investing in Tesla because XYZ. I want to have exposure to Bitcoin because XYZ. And if you only look at price, right, you're going to be influenced to buy or sell off of emotion. But if you just take a second and if you see Bitcoin's price start, say all the crazy stuff happens, the black swan event, Bitcoin's like 58, 52, 47, 35, and you're starting to panic, go back to your notes or go back to your mental note you made. Why did I decide I wanted to buy Bitcoin? Is it because it is the most volatile asset? Is it because it serves a purpose? Is it because you wanted exposure to a commodity? Is it because it's the most decentralized network in the world? Is it because it's the most decentralized ledger in the world that no one controls? You go back and you look at those reasons and then you say, okay, did any of those change? If the answer is no, then you're selling into just short-term price speculation. Now, on the fundamental level, if something changes, that's a different story, but I don't foresee that happening with Bitcoin, at least me personally, in the shorter term. All right. The whole fam in the house. Woo woo, what's up, Crypto Pollo? So, all right. Yeah, Miguel said he was not counting on the tension. I don't think anyone was. Part of being a black swan is like you can't really foreshadow or foretell. But again, we saw what happened actually when this I think it was Friday when Bitcoin went down. And then any piece of decent news, it shoots right back up. And 60K, guys, 60K has continuously proven to be a extremely strong support level for Bitcoin going all the way back to 2020. All right, let's get back here. So let's take a look at some big piece of news here. This is from Toncoin. Tether is launching a ton version of their USDT stablecoin. This is pretty damn bullish for the network, man. Obviously, liquidity is driven from stablecoins. That is what DeFi is using. That is what people are trading in and out of. That is what you're using to onboard and offboard into these ecosystems. And Tether, you don't need me to tell you, they're the largest stablecoin issuer in the world with a market cap well over $100 billion. Actually, let's take a look at what Tether's market cap is. $109.5 billion market cap. It is the third most valuable cryptocurrency or digital asset, if you want to call it that, by market cap in the entire world. And so they're coming to Telegram. You guys got to remember, Telegram has a crap load of users. Their founder, he was on Tucker Carlson, so got a lot of marketing and kind of brand recognition there. They also came out with some updates at Token 2049 in Dubai. As far as what they're looking to implement, you can now tip, buy, send, receive directly from a native wallet via the Toncoin inside of the Telegram app. And, we take a look at, why are people so bullish on it? I'm not particularly bullish longer term because of the amount of tokens that are kind of centralized into one sector of people holding. So for example, on Toncoin, you have 90% of the tokens being held by the top 100 wallets. That's not very good. That's not good at all, actually. But the narrative, what they're doing, why are people so bullish on Base and Coinbase? They have 100 million users. They have a native wallet. They're going to onboard all those people. Same idea, right? I think the number is like 200 million users on Telegram. You have a network that the coin, the underlying asset is integrated into the app. They got a native wallet. They got partnerships. They got the largest stablecoin issuer. They're now going to have a stablecoin in their ecosystem. From just a short-term price speculation, we can see this thing run up. And if those 100 holders that control 90%, I haven't really dug in. Like, is it vested? Is it locked? Who's holding it? I'm assuming a lot of it's held by the foundation, the Toncoin Foundation. Obviously, some VCs, insiders, whatever the case may be. But I don't know if there's lock periods, vesting. I haven't looked into that. But you can assume here, if they cooperate, they don't dump on the market, could we see a $150 billion market cap for Toncoin? When we throw these numbers out there, and I did a video, and I said, near an ICP can 50x. And people are like, there's no way. It's all in comparison of what we're looking at, right? Obviously, at a 2.2 trillion market cap, yeah, I'm not saying that ICP and NEAR are both going to have 10% of the total market cap. But if that number is 6 trillion or 10 trillion, then it's all relative, right? It's all relative to what the total market cap, the total value is of cryptocurrencies. And if a project like NEAR or ICP or Solana or Ethereum, you take a look at Ethereum, do you guys think Ethereum's going to have 17% dominance over the crypto markets? I don't think so. So where is that dominance going to go? ETH is coming in at $369 billion. Let's just say theoretically for round numbers, crypto gets to $10 trillion and ETH's dominance goes from 16% down to 10%. That's $1 trillion for ETH. And you're telling me a 250 billion market cap for ICP is crazy? Or a 250 billion market cap for NEAR protocol is crazy? Or a $250 billion market cap for Solana is crazy? I don't understand. Like, you got to look at everything relative. So I just wanted to address that. It's kind of been bugging me a little bit, or eating at me. All right. So anyways, Toncoin, bullish on it in the short term. I don't have any exposure to it. I'm curious, you guys watching, do you have any exposure to Toncoin? Let me know in the comment section. But this is something that piqued my interest enough to where I am going to go and dig in to look at how those tokens, the top 100 holders of the 90% of the tokens are being held, is invested. Because as far as from a narrative and what is happening on chain perspective, it's pretty bullish. So yeah. All right. Let's talk about Bitcoin price sparks debate among analysts as having nears. So we'll get into that and then we'll take a look at a Bitcoin chart and how Bitcoin has performed in the last cycle with the halving in 2020. So on-chain analysts are keeping the hope of a bullish outcome while predictions from technical analysts have been somewhat mixed. The head of research at CryptoQuant, Julio Moreno, said that it is hard to tell where the price will go after the halving. However, he was quick to point out that traders have taken profits and the sell pressure is diminishing. So let's take a look at BTC. Take a look at BTC in 2020, okay? So the green vertical line is May 11th, 2020. That is when the halving happened, okay? We take a look immediately after the halving, we saw a short-term price appreciation of around 16%, right? We came down, we chopped up. So essentially, we ranged between $8,491 and $10,200. So we had a $2,000 window that we were going up and down in, and this lasted for around 77 days. Once we broke out, we saw Bitcoin's price appreciate from top to bottom, from bottom to top, around 27%, right? Bitcoin's price dipped. It had a big sell-off. After the price started selling off, we saw a sell-off of around 17, we'll call it 16%. And then what happened to the price, right? We had another 45 days of Bitcoin trading between 10,100 and 11,400. So that gap, right, that window, that channel went from 2,000 to only 1,000, right, or $1,400. And so the range tightened. And then what happened, my friends? Let's take a look here. Well, it's called the bull market, guys. Subsequently, after that, Bitcoin, you know what? I'm going to do this actually. We're going to take this because this one shows us our time. So subsequently, Bitcoin, on its initial rally before it had any significant pullback, we saw Bitcoin go up 270%. Then we saw Bitcoin's price depreciate from those highs around 30%. So we saw 30% pullback, okay? And then what happened after that? So that happened in a matter of 82 days. Then from the bottom to the next top, we saw Bitcoin rally 100% in 26 days. And then we saw another 23% drawdown, right? So that took only 26 days. Then from the bottom to the top again, Bitcoin rallied 36% in 14 days. If we stretch it out in the same time period as it had in the early days when it broke out here, 46 days, we saw Bitcoin rally 42%. That was the first top of the market where Bitcoin saw it get to about 64K. Then we saw a big drawdown, a fake out, and then that's when Bitcoin had its all-time high of around $69,000. So where are we at today as far as price action? Kind of similar, right? So the halving is today. So could we see a rally into the halving? Sure. There is good news here if you take a look at single candles. So we failed on a bullish engulfing pattern here. This is actually known as a bullish, I want to say harami candle. And so if this stays the same, or this body gets smaller, this is a positive sign. This is a reversal candle here. It's called a hammer candle. You want to see it at the bottom of a downtrend. The color doesn't technically matter, but obviously being green, it's more positive. And we did get a buy signal on our Lux Algo Matrix Oscillator. So could we see a rally into the halving? Sure. Can we not? Sure. But we know what's happened. Bitcoin starts to get range bound between 40 and 80 days. We see a big spike up. Range bound, a little bit of a dip for, let's just say, half of that amount of time, so 20 to 40 days, and then we see all-time high. So with that time frame, you're looking at mid 2025 going into like September of 2025, where we could potentially see a cycle top if price continues to perform the way it has historically for Bitcoin post-halving. So take a look at the rest of the markets here. Bitcoin $64,268. Again, had a nice comeback rally after the weekend dump and the dump yesterday from the whole Middle East situation. ETH rallied back as well, up over 3,000. Well, not up 3,000, but at $3,000, up 0.41% over the 24 hours. BNB 558. Solana making a nice rally here, 4.5% over the last 24 hours. We saw Solana get as low as $120. So if you bought Solana, congratulations, you're up a decent amount here at the $120 level. XRP at 50 cents. Doge at 15 cents. Doge actually held up pretty nicely. The rest of the markets bled off pretty hard. I mean, Near went from 750 to under $5. I know XRP got down around that 48 cents. Cardano got down to 45 cents, which is kind of still there right now. But Doge held pretty strong. Went from like 18 to 15 cents. And so Doge is something, our friend Forrest is super bullish on. We're pretty bullish on Doge as well. I also buy into the narrative that I believe Doge is going to get an ETF. They're the closest thing to Bitcoin from a regulator perspective, right? The founder, there's no founder really, right? You have Billy Marcus, but those guys have stepped away. They don't hold any coins. It's a proof of work network. You mine it, and there's no really not as far as I know, a Dogecoin foundation. Kind of runs on its own. People use it. People speculate on it. So could we see an ETF? I think it's possible for sure. Toncoin is actually down. So this looked like it was a buy the rumor, sell the news event. As the founder, again, as I mentioned, was at Token 2049 and made those announcements as far as Tether and what they're going to be using the Toncoin for. That is down 1.5% over the last 1 day. Just be careful with this, man. With Toncoin, just be careful. At some point, those token holders are going to dump their coins and you're going to be left round tripping a bag. And who knows if this thing crashes, will it come back next cycle? No one knows. We don't even know if any of these will come back next cycle with the exception of maybe Bitcoin and ETH. Anything can happen, right? This is new technology that is growing very rapidly. Now you throw in AI with it. Who knows? Is it going to speed it up? Is it going to throw a wrench in it? Are we going to need 5,000 blockchains? Who knows what can happen unless you have a magic 8-ball. Just be careful. Something like Toncoin, I would have a ladder out plan, very concisely laid out. What price targets or what percentage moves am I looking to deleverage or ladder out my position? So this is just my recommendation, but it's your money. You do with it as you please. And the Cardano top 10, holding on to number 10, coming in at 4.9% over the last 24 hours, up 0.5% over the last 1 hour, 47 cents. A lot of people are bearish on Cardano, man. I am not bearish on Cardano. I'm very bullish on Cardano. Once Voltaire goes live, here's the unique thing about Cardano, and I want to give a shout out to Adam Dean. I know he watches our channel from time to time, but he's a co-founder of NFTXLV. Super cool guy, very knowledgeable. He builds on Cardano, and he quote tweeted someone, and they said, well, why doesn't Cardano do this? Why doesn't Cardano do that? And he quote tweeted it and said, stop expecting things from Cardano. We are Cardano, meaning the community is Cardano. And that is going to be the truth once Voltaire and the Chang hard fork go live. Once the treasury gets unlocked, right? You're talking about $1 billion of ADA in the treasury that you can vote on as an ADA holder, become a delegated representative or part of the constitutional committee, or obviously a stake pool operator. But you can vote on the direction. Do we want to spend money on marketing? How do we want to market? People are saying, we don't have a USDC or USDT. You can throw that into the pool of, hey, what are we looking to do with Cardano? And if it gets voted on, pull the money from the liquidity or from the thing and you can do it. Or if you want to spend it on, again, marketing or building a DApp or building a great native wallet, whatever you feel as a community, as a Cardano community member, that Cardano is lacking, once Voltaire is here, you'll be able to do that in a decentralized way. And essentially, the keys to the blockchain will be handed over to you. And so, again, I have said this over and over and over again. If you're looking for a 10 to 20x in 3 months, 6 months, a quick one. Solana, $8 to 200. That is not Cardano, okay? That is not the niche Cardano serve. They don't give a crap about the price. No VCs. There's no one pumping the token. It is all organic from retail and whatever the ecosystem is doing. We saw Cardano last cycle go from 5 cents to $3 with nothing, just speculation alone from retail. Retail is just not here yet, right? Retail is currently struggling to pay their bills. Retail is struggling with credit card debt, right? But once retail does get back in, because you better believe it, at some point, we will start seeing quantitative easing again. We will start seeing borrowing money and leveraging debt become cheaper again. And what are people going to do? We can assume they're going to do something similar to what they did during the pandemic in 2020. Is they're going to say, I'm sick of this damn system. I need to get ahead in life. What industry can I do that in? Can't do it in the S&P. Gold moves like 1% every year. Where can I do it? Here you go. Here's a beautiful cryptocurrency play on cryptocurrency on a platter here. So super bullish on Cardano. I did actually do a video on everything you need to know about the Chang hard fork and Voltaire. Make sure you guys go watch that. It was a really good video. One of my favorite videos I've recorded. All right. Let me go back to CMC. Let me take a look at the chat here. So we got 268 people watching, 96 likes. Do us a favor, guys. Let's like this video. Let's get the likes up. Less than 100 likes. Come on, man. All right. Just going to go through the chat here and see what you guys are talking about as performing historically. All right. All right. Well, no idea what you guys are talking about. Coinbase says I have an NFT balance 24, but no NFTs in there. No idea. Bought an NFT, kind of like, oh, speaking of NFTs, you know what? Perfect segment here. Well, not really an NFT, but so I did mention that runes are coming, or well, something is coming to Bitcoin that is going to help its long-term security. And that thing is runes, and we're going to talk about what it is and how you could potentially make some money with it. So this article from cryptobriefing.com, runes could solve Bitcoin's long-term security. This is, or that's quoted from Into the Block. The Bitcoin halving is less than 10 hours away, and the introduction of runes is set to make this halving different from the last ones. This time it's different, bro. Trust me. Spearheaded by Casey Rodarmore, known for his influential work on Bitcoin ordinals, Runes is a new protocol for creating fungible tokens using Bitcoin's infrastructure and could potentially solve the blockchain's long-term security. So there's a quote from Into the Block. Runes and ordinals, although controversial, only to the maxis, are likely to contribute to Bitcoin's security budget and make the network more sustainable as inflationary rewards decline. Speaking, of course, of the halving rewards. Transaction fees, which surged to over 20% of total miner revenues in December of 2023, are anticipated to play an increasingly vital role in compensating for the 50% reduction in block rewards. Now, runes, in the most simplest way I can explain it, is doing the same thing that BRC and ordinals were doing, but it's making it more feasible for the Bitcoin network and not bogging it down, and you can have similar things, even more capabilities than what you have currently with ordinals and with BRC20 tokens. But just understand, guys, when this thing goes live with the halving, it's going to be an influx of people going to that rune or going to trying to mint or etch or transfer these runes. So you're going to pay a high transfer fee. Just understand that the network's going to probably run slower. But I do want to share this with you from Leonidas. Some tips for minting runes that don't get you wrecked. So we're going to go through this and kind of discuss it. So Bitcoin has a slow block time. So a lot can happen between blocks. If a rune is close to minted out, you need to make sure to pay significantly higher fees than everyone else to ensure your transaction gets squeezed in. Because if it doesn't, you don't get the rune and you lose the fees. So the way it works is you can etch something onto the Bitcoin the network, right? And you can put limits. You can put, hey, only allow 1,000 minted. You can have pre-mine. So if you decide to launch a rune, you can say, hey, look, max supply, think of an NFT, max supply 10,000, but I'm going to pre-mine 2,000. I'm going to keep 2,000 of them, right? People can go in there and they can mint the rest. Once it gets to 10,000, it's done. So what he's saying is, if you're keen on minting a rune token or a rune product, and it's towards the end of the max mint, you want to up your gas fee, your transaction fee that you want to pay the miners. That way they put your transaction ahead of the rest of the people that are potentially also trying to mint that rune. So that way you don't lose out on the transaction fee and also not get a rune in return. Remember, you're competing with everyone else to do the same thing, so network fees will spike in the last hour of a very popular mint. Think of the mempool as an auction, and the highest bidders get their transactions accepted first. Very, very good analogy there. If you don't think, as number 2, if you don't think something will mint out for a while, be smart and try to mint it when fees are low because there is no rush. Fees tend to dip on the weekend and late night in North America, for example. You can just put mints in the mempool at a low fee that will sit there for a few days. Also great advice. Pay close attention to the mint mechanics before minting. For example, the hard-coded rune that Casey is doing, called Uncommon Goods, is a 4-year open mint. You would have to be really dumb to mint that tomorrow on the highest day of fees in Bitcoin's history. Instead, you want to wait until a bear market or when fees are very low and people aren't using Bitcoin very much. Otherwise, you are just going to pay 10x what someone else pays for the same amount of tokens because they were smart and waited for a bear market between now and 4 years from now. That's the cool thing too, is leveraging the UTXO doesn't bog down the Bitcoin network. And you can also do a time limit or a amount limit on however many runes you want to let people mint. So the person who etches the rune can do a pre-mine to themselves. Just went over this. Think of the pre-mine as the amount that would be dumped on your head after a rune mints out. Anything over 10% is greedy. When all the person did was broadcast a Bitcoin transaction, that is a good point. 5% is more reasonable. What is way cooler is just filtering for no pre-mine. I get it. Like if you launch something, you want to keep a little bit of it for yourself. I don't think there's any reason to hate people who put in work and time, who decide to come up with an idea for them to make some money on. Like, I don't understand what's wrong with that. Now, there's ethical ways of doing it, and there's non-ethical ways of doing it. Obviously, if you keep 30% and you just dump it right after, obviously that is not ethical, at least moral, right? So I think this is a good standard here. 10%. I would not actually. 5 to 8% I'd be okay with. 10% is a little greedy. Think of minting runes as buying them because that's exactly what you are doing, except you are paying to secure the Bitcoin network on the creator. In your head, you should be thinking in terms of market cap. If a rune takes 100,000 mints to mint out and the fees to do a single mint are $100, then ask yourself, would you buy this rune on a DEX at a $10 million market cap? This is very important to understand and can help you make informed decisions. For example, of the first 100 runes, there will be many that are open mints. The logic is that you want to find the one with the least mints required to mint it out, which means you are getting less than 100 rune at the lowest market cap possible. This is great stuff, man. You know what? I'm gonna like this and I'm gonna retweet this. We're gonna quote retweet this. Excellent job explaining runes. And let's throw in a little clap emoji here for Leonidas. Leonidas, good job, man. Thanks for keeping the community informed. And guys, I highly recommend you go follow. So Leonidas NFT. So very interesting. A lot of money could be made. There's a lot of different places you can go. There's rune marketplaces that you can see. And this is going to be great. Can it replace ordinals in BRC20? People are speculating yes. Some are saying they can live side by side. But what we do know is, although it might not be, it's also compatible with Lightning Network, and it's backwards compatible, which is really good. So shout out to Casey, man. Casey's the one that came with the ordinals and now with the runes. So big shout out to Casey Rotomore. At the end of the day, if you're part of the Bitcoin Maxi group that is saying all these stupid inscriptions and NFTs and this and that, guys, soon, so this year, right, in about, where's the halving clock? I lost the halving clock. In about, let's call it 7 hours, miners are going to go from making 6.25 to 3.125 Bitcoin. 4 years from now, that 3.125 is going to go down to 1.5, whatever that number is. And then it gets cut in half again, and then again, and then again, and then again. So the miners They're in business. We want to make money. How do we make money? You need things other than sending a transaction from here to there to give the miners incentive to stay around and decentralize the network. If you start getting to where mining isn't profitable, you're going to see people unplug. Of course, the difficulty will come back down. And then you might see a monopoly of hash rate, right? We're kind of seeing it now. You have two that control 50%, which I believe is Foundry and there's another one. Skip my mind. But Foundry and the other one, that might get worse. And so we got to be open to different ideas. Again, this is an emerging technology. So we don't know what the future will look like in 5-10 years from now. Could we get something that will allow transactions on Bitcoin without bogging it down at all on the main chain? Who knows? That technology, I don't think it's here yet, but we'll leave it to our smartest people in the space to go ahead and do that. All right. Let's take a look what we got here. All right, 112 likes, not bad. Pretty good. Let's see. Taking a look at the chat here. Would you invest in a project that said they can handle 4,000 TPS, have a problem handling 1,000? Not sure what they're saying. I think he's talking about Solana. All right. Let's talk about the big partnership I mentioned with Aptos. Take a quick sip of water here, my friends. Also, if this is your first time watching us, this is not our usual setup. We do have a co-host and a producer. We do have a studio here in Las Vegas, Nevada, but our studio is under renovation and construction. So I am doing this from my home while my co-host and business partner is at the studio setting everything back up. So strategic partnerships, Microsoft, Brevan Howard, and SK Telecom join Aptos. Okay. Aptos Labs has recently established a new partnership with Microsoft, Brevan Howard, SK Telecom, and Boston Consulting Group for the development project of Aptos Ascend. The institutional platform aims to promote the spread of decentralized finance among institutional investors through the Aptos network, as well as increase the global liquidity of tokenized assets, among other objectives. Aptos Ascend represents a digital wealth management platform designed for financial institutions. This product will leverage Microsoft Azure, a renowned cloud computing platform, along with the Azure OpenAI service. Furthermore, Aptos Ascend will leverage the investment expertise of Brevan Howard to guide financial institutions in offering digital currency services and wealth management to their clients. So, and then this is from Mo Sheikh, the founder of Aptos. Global institutions require higher levels of compliance, security, trust, and innovation to serve their customers, operate across borders, and adhere to regulations at all levels. As Aptos is saying is that we can do that for you. Now, Aptos got that moniker of, hey, it's another Sam coin, it's another Solana VC pump and dump. You know what? Actually, I'm going to go to CryptoRank. CryptoRank is my go-to for take a look at vesting, ICOs, token unlock. So we take a look at Aptos here. Only 39% of their supply is currently circulating. This is around 425 million. Does not have a max supply, so they can continue issuing new tokens. They got an unlock of around 11 million coins on May 11th. Total supply now, as of now, is a little over $1 billion. You had big names investing in it. Take a look at the fundraising. Dragonfly Capital, Binance Labs. You had, of course, FTX was a lead here. $150 million raised in July of 2022 with FTX leading the way. You also had A16Z, Franklin Templeton. Some big names back in this project. If you take a look at the vesting here, so let's see their token allocation. So about 8% is on track. 51% went to the community, which community, is that like rewards? I don't know. Core contributors, 19%. Foundation, 16%. So basically, okay, if we lump in core contributors, foundation, investors, this is 30%. We got 50%, almost 50% of their supply is to people who are probably looking to make money. Now, if we take the foundation out, you're looking at 33%. So a third of their entire supply is going to investors, VCs, core contributors. Not very good, man. That's not very good. But some people don't care about that. Some people just want to look at, hey, what are they doing? Are they building? And obviously, you got a big name like Microsoft. I believe they're the most not profitable. They're the most valuable business in the world. I could be potentially wrong, but they're top 5 for sure. So largest software company in the world. So big partnership here for Aptos. Take a look at prices, $9.52. Market cap of around, I'll go to overview here. Market cap of around 7.5 or 4 billion, had a all-time high market cap of around 7.6. So I don't know. This is something that I don't have exposure to. Hey, you can't have exposure to every single one of them, and you can't make money on every single one of them either. All right, let's take a look at DeFi. DeFi explodes in Q1 of 2024, led by Ethereum liquid staking. So total value surged by 81% in this year. While some growth can be attributed to rising underlying asset prices, Messari highlights the crucial role of liquid staking initiatives. Now, I think this is interesting because the liquid staking narrative, right? You now have the thing of restaking, right? From when the Eigenlayer raised a lot of money, restaking ETH. Haven't dug into that, but it's like, guys, just using the same money just to make more money, which I know in theory is good, but there's got to be some exploits or something going on. Anyways, I'm not a developer. I'm not I don't write code or program, so I don't want to speak on it or give too much of an opinion. But no product is perfect. So I'm sure there's downsides to restaking. But hey, people are pouring money in. And so what I want to talk about is what are some of the top liquid staking protocols on ETH. Part of the reason why is that Ethereum ETF in the US, we know that I think all or majority of the large ETF issuers, you got BlackRock, Fidelity, and a few of the other ones, they added staking into their application. So we can, of course, assume that if it gets approved, the ETH that they buy on behalf of their clients, they will probably insert it into a liquid staking protocol, earn the reward, and be able to have it liquid. That way, if their clients sell it, or if they got to batch sell a bunch of ETH, they can access that money. But while no one's selling it, the ones that aren't being sold, the ETH that's not being sold, they can make money on it. So what are some of the top liquid staking protocols? Obviously, I'm going to do this on Crypto Rank. So obviously the big one here, guys, is Lido and their DAO token. That is up 2% today at $2 even. So as far as TVL, this is the largest. It does have a market cap of around 1.78 billion. The other one is Rocket Pool. Higher price, but lower market cap, under 500 million, coming at $21.83. And one that really no one talks about is SSV Network. As a gateway to non-custodial open source ETH staking. This has a market cap of $268 million. Total supply of only 11 million coins with a circ supply of 7 million. And that is trading at $37.91. You know what, man? This might be a good pickup right here, dude. I've had my eye on this, but when you you think about something, you're like, oh, that's pretty cool. And then when you're sharing it with someone or you're telling someone it, you think back and you're like, what? Why did I not put any money in this yet? So I currently don't, as soon as the show's over, I'm going to go buy some of this. What are the markets? Let's take a look. Has to be on Coinbase. What? Not on Coinbase? That is very interesting. Now, why do I say that? Typically, Coinbase, when they invest in a project, Coinbase Ventures, when they invest, they list it on their exchange, right? Maybe because the volume's not there. I don't know. But you take a look at the fundraising. They raised money from Coinbase, DCG, and OKX, $10 million back in February of 2022. Let's see if Coinbase invested in Rocket Pool. They invested in Rocket Pool as well. And I can't remember if they invested in Lido. They invested in all three. Interesting. Okay. But as far as upside, take a look at SSV, under about a quarter billion in market cap, very, very low supply. And so this one's interesting, man. I think I'm gonna, because this one's not even listed on coin. So it's got 17,000 validators. It's got around 1.7 billion in TVL. Wow, let's take a look at where Lido is on TVL. All right, we're gonna go chains. We're gonna go. So Lido's at around, damn, 28 billion. Holy shit. 28 billion. So Lido's got 28 billion, and this is just on ETH, of course. If we just throw in, we'll go to home. See Lido, because Lido doesn't only do ETH. See the TVL, 28.7 billion. So 28 billion, and then we go back to the token price, and I think their valuation was 1.7 billion. Take a look at, let's see if SSV pops up here. SSV does not pop up here, okay. But taking a look here, SSV again, 1.7 in TVL. So it's a permissionless protocol in Ethereum that enables a splitting of validator duties to trust minimize node operators to increase resilience, uptime, and liveliness. So this is an interesting one. Throw it on you guys' radar. Definitely, obviously, do your own research. Is that PlayStation? All right, but again, going back to liquid staking. So if you don't have exposure to either of the three that I just went over, or the Lido, Rocket Pool, SSV, you probably should, because the amount of potential money that can flow in from the BlackRocks and the Fidelities and whoever else decides to do an ETH ETF, who knows which one they use, but you probably want to have exposure to at least one or two, or maybe even all three of these, or maybe one that's under the radar that you know about. But just something to keep in mind, the idea to making money, or you don't want to be late to the party. You want to try to forecast and say, okay, what is popular now and what is kind of gaining traction but isn't here yet? Let me go find the infrastructure for that. Let me go find the projects that are doing that. You know, Jeff Bezos, in his interview with Lex Friedman, such a great little segment. He talked about building the business going from, and let me get rid of this here. Talked about building the business and looking at, hey, where should we put our resources? He says, look at in 10 years, what is still going to be valuable to the customer? He's like, in 10 years, people are still going to want Amazon to have a large catalog of items. In 10 years, people are still going to want their Amazon packages delivered fast, if not faster. It's like in 10 years, not going to say, oh, I wish Amazon delivered my packages slower, or I wish they had less. So he said, put your resources and energy and money into those things and making those even better, because you know in 10 years, the consumer is still going to want that. So in 2 years, in a year, in 6 months, whenever this ETH ETF goes live, what is the consumer, what is the person launching the ETF, BlackRock, Fidelity, what are they going to want, right? We already know they want staking. Are they going to use a platform? Are they going to try to launch their own? Highly, highly doubt it. It's better to leverage a platform like Lido, like Rocket Pool, like SSV. And so you want to get ahead of these, and that's how we make a crap load of money. All right. I'm about done here, my friends. Shout out to you guys for showing up, man. Thank you so much. Hope you enjoyed the content. Happy Halving Day. Comes around only once every 4 years, and so pretty exciting. And let me tell you guys, man, you guys are going to be absolutely blown away by what the studio looks like in around a week and a half, 2 weeks. And then once we get our massive LED wall in the back, which we're working on getting now, I would challenge any of you to find any single production in our space that is better than what Sin City Crypto is going to bring you guys. We're super, super stoked for that. We hope you guys stick around and join us on this journey. We are extremely excited. And so it's going to be sick. Our custom desk comes next week. We did the entire room. If you've been to a studio, I know Redman's been to our studio. Billy's been to our studio. You guys, when it's done, we'll invite you guys back. And when you walk in, it looks completely different. We're super stoked. So Guys, thank you so much for tuning in. I love you guys so much. Have a lovely weekend. We'll see you guys back. Whoa. You're an ICP fan. We got Kyle Langham joining us from Definity. Going to talk about the halving. We're going to talk about AI and ICP and how they're looking to revolutionize it. Super excited for Kyle to join us. That is going to be Monday at 2:30 p.m. Eastern Standard Time, 11:30 a.m. Vegas Pacific Standard Time. You do not want to miss that conversation. It's going to be a really good one. We're excited. Happy halving. I love you guys. Have a great weekend. Until next time. Peace.